Hi everyone, welcome back to the Crypto Buzz UK channel. I hope you're well wherever you are. I'm just going to cover off some progress on the charts and really what I'm looking at the moment. Future targets, obviously, and pretty much a deep dive into the sort of wider long-standing or long-term key levels, for us to pay attention to. If you do find this content interesting or useful, please like and subscribe. I usually cover off sentiment, but let's be honest, it's not changed much in more than 2 months. So yeah, from the kickoff monthly chart, as you can see, I've just marked two key long-term levels. So we've got effectively the 13.8k level as well as just sub $20,000 level just there. That in turn creates what I've put as a green box in terms of a projection as to any no-nonsense buy zone. A sense checklist briefly with the past in terms of declines. So if we go from market top to market bottom, you're looking at a 93% decline. And if you go from 2013 top, 2015 bottom, it's an 86.6% decline. And 2020 top down to bear market bottom December 18 is an 84% decline. And just a sense check what I'm looking at here, if we were to do something resemble something remotely similar, the top to $20,000 is 71% and the bottom is just shy of 80%. So for me, that doesn't seem unusual. 93% decline, 86% decline, 84% decline, and 80% decline. I think worst case. Therefore, between 70 and 80%, in my view, is a pretty reasonable, no-nonsense buy zone. All right, so now that is set, okay, in terms of why I've marked these two key levels on the monthly chart, let's go to the weekly chart. On the weekly chart, these are the two main structures I think Bitcoin is in. Both are parallel channels. We like parallel channels, and they seem to be everywhere in Bitcoin because, well, let's be honest, we've got a range high and a range low, and as you can imagine, interaction, market psychology always takes you to the midpoint, and midpoint is where all the interactions or movements or change of direction, support resistance generally take place. So that's why, in my view, there's nothing revolutionary about parallel channel, but it just so happens to reflect market participants' actions or inactions. So the way I look at this, we've got a large upward parallel channel dating back to 2020, back end of 2020. You can see in the last 2 weeks we have broken through the parallel channel and actually tested it as resistance not once but twice, and we got rejected twice, as we all know, hence why we're seeing a sell-off now. All right, that's the first thing. The second thing I'd like to mention is a measured move. Okay, so assuming this top upward parallel channel is what I think it is, then you'd expect a measured move from the point of break to be, lo and behold, in the region of the base of the buy zone. All right, so if anything, that's just additional confluence. Worst case scenario, we may enter this zone. And by the way, these are zones. It's never going to hit the price to the pound, shilling, and pence, as we all know. So that's the first thing. That's the significance of the upward sloping parallel channel. It's been back tested twice and rejected twice. The second parallel channel we've got is a downward sloping parallel channel. You can see here we had resistance here. We found support on it here. Then we found resistance again. It was incidentally the midpoint of the upward parallel channel. And obviously we got rejected. And we found support by a wick, recently, about a month ago in May. And we've had what is a pretty significant bounce. So that's quite an important point. I do think there is a possibility we do see something like this, only to get rejected and effectively build our base up. That's one possibility, and there's thousands of possibilities. I'm not going to plot out, 10 different varieties. It's a waste of everyone's time, but it gives you a flavor of the two key structures that we're in, clear areas to monitor. Do I think that we get above this upward slope in the base of the upward sloping parallel channel? I think it's quite unlikely. We've been rejected twice. I do think we chop around the 20s range. Okay, so that's all well and good. In terms of additional kind of long-term sort of macro price action related additional confluence in or around this zone, I'll show you briefly the modified pitchfork. So if we go from 2020 top, the 20k top to the bear market bottom, all the way to the $69,000 peak in autumn winter last year, you can see that this has played a role, if you like. You can see we never actually closed a candle in the run up in April, June 2019. Some of us might remember, well, we found resistance here, but we never closed a weekly candle above this median line, which if we follow through, we found support on it before we broke through the $20,000 level back end of 2020. I think we all remember that. And currently we're finding support on it on the median line dating back to God knows when, 2018. We're currently finding support on it. So we've had one wick and we've had the candle itself hasn't closed yet. But you get the idea. There's definitely something to go at here as far as the overall trajectory. In terms of where we are at the moment, you can see, we're above the median. I think if we break that, we'll see another leg down. I think there is some continuation. But taking a step back, you can see that we got rejected, if you like, at the top of the pitchfork. We had interaction with the green line as we had interaction with the green line here. It was this sell-off, and this structure here that gave us the support to move up, only to come back down and find it as resistance. You can see that you know what I'll do, just for ease of reference, I'm going to delete the parallel channels. That'll do. In fact, I'll delete that as well, and I'll delete that as well. So that should be clearer. We found resistance on this line. There was a lot of interactions with this green line here. Clear rejection. Well, we found support now, currently, on the median line. I do think we chop around this level further, and then we test this zone. And it just so happens the accumulation that occurred in 2019, and obviously the sell-off in March 2020 and just prior to that, these were the best accumulation zones using this channel, the pitchfork. And I do think we have interactions with this green line again. Okay, so if I just bring those back in, you can see I've put as a guide a timing wise of between August 22 and January 23. I do think it's reasonable, somewhere in that zone, but I do think this green pitchfork line will be an important area. Whether we just bounce off it and find support, or we actually go straight through it, potentially like this, it remains to be seen. But that's what I'm looking at right now. I do think we may as well take a step back from the charts, let things play out. Bear markets take time. Be patient, stick to the plan. There's no need to take urgent action. This thing will take time to play out. There'll be plenty of opportunities to add to our positions, etc. So good luck everyone, and I'll see you all on the next video.